Turn our focus now to Cape Town, where we are joined by Marcel Joubert. He is the Group Chief Executive of the Platinum Group, and this is, of course, on the back of the story that's been making headlines that the group is in trouble with many of their stores closing shop. Perhaps let's get Marcel giving us a clearer picture of the extent of the problem. Marcel, thank you for joining us. How bad is the problem?
There is financial pressure on us at the moment. The reports that ran in some of the newspapers on Friday that the group is in liquidation, those are completely incorrect. It's an open secret that there has been pressure, and those are for non-business related reasons. We've been quite open about that with all our suppliers and stakeholders. I had a period of illness 2 years ago, and as a result of that, the group sustained heavy losses in the trading period immediate after that, and it weakened our capital base. So we've been quite open about that. There's absolutely no secret, but to say that we're in liquidation is not correct.
Marcel, bad news obviously to hear about your illness, and it was clearly serious. It does raise the question, if the chief executive is ill and the business then can't operate, is it not perhaps depending too much on one man and his vision and energy and whatever?
David, there was a little bit more to it that particular year. I mean, I don't want to go into all my personal things, but we'd had a dream run up to that period, and as Queen Elizabeth would say, it was just an annus horribilis, at every level. So it affected other members of the executive team too. And in analogous terms, it was a little bit like losing your fly half and scrum half at the same time, and still trying to play a test match.
And of course, Marcel, we've also had a lot of retail analysts coming to the fore, giving their analysis of what exactly went wrong. Let's get it from the horse's mouth. If you could pinpoint the three things or the three mistakes, for lack of a better word, that you think led to the loss of capital, what would these be?
It's as simple as health issues. We'd had a great run up to that right through the financial crisis. I mean, year on year, every year we were trading 50–60% up. We were shooting the lights out. The year immediately before that, we did 450 million of turnover. We made 50 million bottom line. So we were having a great run. So we've got to be very clear about what the diagnosis is. If you stub your toe, then the stubbing of the toe is the issue. It's no use prescribing euthanasia for a stubbed toe. So, we just need a little bit of context. We're hearing all sorts of reports about it. It's the arrival of Zara, and it's the arrival of Country Road, and so on and so on. I think we need a bit of context on that. Zara's opened 3 stores in South Africa. I don't know exactly what their turnover is, but I would estimate it's probably 500 million a year. It can't be more than that. They've maybe got a 0.25% market share. Cotton On is a much bigger success story in South Africa. They've opened about 100 stores. I doubt whether their turnover is more than about $1.5 billion. Probably they've also got about a percentage market share. They've had a very limited impact on the market, and certainly the local retailers, they're outstanding local retailers. Mr. Price is one, Cape Union Mart is a private grouping, Woolworths are doing a great job, Foschini as well. So, all the local retailers can hold their own against anybody in the world, and when we're fighting fit, we can do exactly the same. So our issues, they're internal issues, and they have nothing to do with marketplace.
Marcel, a rough time, and now you're trying to fix it. So you've said that you would rather have interest to recapitalize from private equity rather than retailers. Why is that?
Private equity, and then also there are private consortia. We're fiercely independent, and we're firm believers, if you look at our track record, in healthy fragmentation in the market. And there's some very strong South African retailers in the big groups, but it's a little bit of an endangered species in the small independents. I mentioned Cape Union Mart earlier. That's one grouping. We've got a lot of respect for them. The Busby grouping is another one. And then there's ourselves. There's probably 3 large independent, perhaps the Surtees group too. So, I think what we're very much in favor of is leaning more towards the UK, where you've got 100 private independent groupings, and that's very, very healthy for the state of the industry.
And of course, should that capital come through and those transactions come through, Marcel, it also begs the question, what are you going to be doing differently? And perhaps your insights on that would also be very interesting.
We pride ourselves on our humility in reading situations. So our starting point would be to engage with our customers, as we always do. We've got a very stylish customer base, and we're always very close to them, and we work very hard to read the market correctly. So we would continue to do that. We work very hard to stay with the times and to reinterpret whatever the shifts are, and to make sure that we're always abreast of whatever the developments are. And we would continue to do that. We've got 100 million rands worth of stock in winning lines, in absolutely tantalizing designs that are sitting in warehouses. and our mission is to get them on the shelves so that we can serve our customers as we do.
Marcel, a bit of a paradox in your statement. You talk about there's great demand for our products, and you've just reiterated that, but we have a lack of capital, so there's a gap there. In this kind of business, it's the buyer, isn't it, who has to have his or her eye on the trend and to be ahead of the trend, because if you buy the wrong stuff for next year, you've got a lot of stuff on your shelves. Is that formula working for you?
Absolutely. Our issue is not a lack of demand. We've got unbelievable demand. We just don't have the capital to get the stock on the shelves. So whatever we put on the shelves flies out. We're sitting, currently our stock levels at the moment are about 1/20th of what they normally are, and whatever we put on the shelves flies. So that formula is working. We've got arguably the strongest design team in the country. They're very good at what they do. They're very good at reading the market, and the designs are good. We're in the fortunate position, internally we speak about it and say it's a little bit like, not that we are Apple, but if Apple had, the brand, the stores, the stock, the demand, the customer base, and the iPads, but they don't have the funding to get the iPads on the shelves, then they can't service their customers. So it's a very frustrating situation for us, and that's why we're working so hard to find solutions.
Marcel, I happened to be in Nelson Mandela Square earlier today and walked past your Akajo store, which was half empty and clearly looks like they're in the process of packing up. Give us a sense of where we're going to see the Platinum Group footprint from here on, given that the stores that we're used to seeing are clearly on the verge of closing.
Well, I mean, that's not entirely correct. We've got 55 stores that are open and trading. So, like anything else, there's nothing like a little bit of adversity to find out who your friends are. So we've had some amazing support from stakeholders. And then we've had some players sitting on the fence, and we've had a small minority who've worked against us. That particular store in Nelson Mandela Square, it's got a double whammy to it. It's in the Akajo stable, and the stock levels are particularly low in the Akajo stable. And then secondly, the lease is up on that store. So there's nothing untoward toward it. So there's another retailer who signed up there a while back, so that's completely regular in the ordinary course of business. In terms of where we go from here, we're still very committed to the business. There's amazing support coming forward. I've been on the phone today with various landlords. So there's the store base will, first of all, the mission now is to preserve it, and then after that to grow and expand.
Marcel, final question and a simple one. I don't know if I'm missing something. Great demand for the products, flying off the shelves. No capital. Where's the money, or where did the money go from all the products that were being bought? What was the problem?
David, that's what I referred to earlier. When we'd had a great run, a 28-year great run, and as I said, making 40 to 50 million rand a year after tax reinvesting in all the business. Our capital base was sitting at about 150 million rand. And in the period immediately following my illness, we wiped out 1/3 of the capital base in the year immediately following that, and then another third in the year after that. So we went from being a business that was adequately capitalized to being sorely undercapitalized. And if the risk in that period was death by hemorrhage, the risk we've been living at the moment is death by suffocation, where every single move that you want to make, you just don't have the firepower to do. And I mean, if you look at the cause and effect of that, it's not related to the operations of the business at all.
Well, a very big thank you to the Chief Executive of the Platinum Group joining us there to put into perspective, David, some of the headlines that we've been seeing and to bring some clarity into what's actually happening. My favorite line is that you can't prescribe euthanasia to a stubbed toe. I don't think I've heard something so poetic in quite a while.
And also, I think it was impressive, Marcel Joubert admitting what had gone wrong. I wasn't quite clear what had gone wrong at that period, but as he said, it just shows how difficult it is to run a business. It doesn't take long for your capital to be wiped out, and then you're in trouble. People think these big businesses that, it's just easy to run them, and it's not.
And I know you're a big fan of Jenny Button, so this is a very important conversation for you. A very big thank you, of course, to the CEO there.